Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of ETFs here starting with the S&P 500, work our way down to the Dow Jones, NASDAQ, as well as the IWM Russell 2000. And I'm going to give my analysis and thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas here on these indexes that we're going to be covering. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like the free videos and analysis that we give to you on a daily basis, it's truly nothing in comparison to the membership you get at thetradinganalyst.com. The best part is, once you sign up with your free 7-day trial, you're going to gain instant access to those profitable trade alerts that members are getting on a daily basis. It's a great opportunity and we'd love to help you. All right, so let's take a look at these charts here. Now, if you've been following along here, you know that we have been expecting some weakness here on the market. And what do you know? That's exactly what we're getting. So congratulations if you've been following along on these free videos that we're giving to you, because it's happening exactly how we've been mapping out here. So now, where is the market going? Where has it been? Where are the levels? Well, we're going to take a look at that right now. So right here we've got this support that we broke at about 23.54. We mentioned that as it happened. You can see there's a bounce, there's a bounce. We broke it over here. And you can see these next few days just hung out right below it. And to me, that looked like a bear flag, and that's exactly what happened because we broke below this. Now, if you notice, today is a green close technically because we closed above today's open, but it's really a red day because we closed on Friday here at 23.43.98, and today we closed at 23.41.59, which is a lower close than over here. You can also draw this support level right here. You can see that it bounced off of right here, the low of this day, the open, the low, the close of that day, right around here, and we closed still below that. So to me, this is a weak day right here, and lower low, lower high, lower close. Okay, so that is a bearish day that we had today. So definitely still seeing the weakness that we've been pointing out here ever since really over here that we've been pointing out to you guys, and we have this downtrend line that's going to act as resistance as well. We've got this resistance right here that we pointed out, and then the bigger resistance up here, which was that bigger support, which is now resistance, is 23.54. And to me, as I've been pointing out to you, I don't really see any big support because support is made by sideways trading. So when you have stocks or indexes that virtually go straight up, it doesn't really create any support. Okay, you need some sideways trading like we did over here. Okay, see how it kind of traded sideways over here, traded sideways right here, and over here a lot of sideways action. So this is going to create a lot of support because we had a lot of buyers in this area, a lot of exchanging of shares in that area, so a lot of price memory. Okay, so we don't really have any real support until about 22.99, and that's based off of the highs right here, right there, and right there, and that's going to be a little mini level of support. Below is even bigger, about 22.74. That's really the biggest level of support that's nearby on the S&P 500. So once we get down to these levels, then we can start considering buying some dips. And this is just my perspective. You want to buy the dip here, that's perfectly okay. Just talking about my experience and what I'm seeing on the chart here, and hopefully you can gain something from that. All right, so we're going to move on from the S&P 500. We're going to look at the Dow here. Very similar look. You can see we had the support, we broke that support, and then you can see right here what happened on the Dow Jones, actually, which didn't happen on the S&Ps, is that we had this bearish engulfing candle that actually closed below that support on Friday. Okay, so we broke that support on Friday before today. So that level up here is, and same thing as the S&Ps, we had a lower high, a lower low, and a lower close. So this is really a red day. You know, don't let the colors on the chart deceive you. This is a red day. We closed lower than the previous close here. So this is a bearish day right here. So we have this resistance up here at 2632. That's going to be resistance. And then down here, same thing as the S&Ps. Next nearest decent support is down at 2103. 2103 based off of these highs right here. So once we get down to this level and below, you know, in this range right here, that's going to be a level to me that I'd want to dip my toes in on the long side again, because, you know, let's be honest, we are still very, very bullish. Okay, this is a very bullish long-term chart. Okay, and we made some very good strides over the last year and a half or so, or about a year and 3 months. So don't get it twisted. We are still very bullish, but just on a short-term basis, I do think that we are seeing some weakness, and I think that there's a lot of major names here that haven't quite cracked yet. And I'm talking about, you know, Apple and Facebook and Amazon and Google. You know, those are heavy weighted stocks in these indexes, and once they crack, if they crack, they're going to pull down the market. You better believe that. So the next one we're going to take a look at is the NASDAQ. And the NASDAQ right here, we have a little bit of a bear flag right here. And the difference between the NASDAQ right here is that we actually closed higher than the previous close right here. In fact, we closed above the open right here. So the open of this day, 58.39.33, and we did close above that. So technically, this is a bullish engulfing candle right here for the NASDAQ, but still a lower high and a lower low. So we'll see what kind of happens. You know, today, yeah, a lot more constructive right here on the NASDAQ than, you know, we saw on the Dow Jones and the S&Ps, but it doesn't really negate this day right here. You know, we don't want to put too much emphasis on any one day, but when a day is like this, when we go out and we make a new all-time high, this was a new all-time high, and then we break the lows of this previous month-long range, you know, in one day, big bearish engulfing candle. You know, this is something that really needs to be looked at as a sign of weakness. At least that's the way that I'm seeing it from my years of experience in the market. To me, this is telling me to really be cautious up here on the long side. And as far as support levels, we've got 56.70 based off of these previous highs right here, that you can look for some support down there. And we're going to take a look at the Russell right here, and just to, you know, go back here, we timed this pullback here perfectly on IWM. We liked IWM for a short here, and we published this on our free videos like we're doing right now for you. So congratulations if you did follow along with that. We liked it for a short there, and we said it was going to head back down to this support right here. That's exactly what we got. So that was a nice short play if you took it. So congrats. So now we're looking at IWM, and we're at this major support. This is a major level here, about 133.70 or so, and it was previous resistance right here. And then, you know, that only had a couple touches, so that wasn't a big deal. But then we bounced off of this level several times You can see right there, and then here we are hammering at that level right here. So clearly this is a big level here for IWM, and if it cracks, more than just intraday, but if we get a close below this level, to me that's going to spell something not good for IWM, and I do think that the Russell 2000, if it does close below that level, is going to head lower. Here in the short term, some short-term levels, we've got some resistance right around about 130, 135.40, 135.25, based off of these previous lows right here, and you can see we've reacted to it 1, 2, 3 days in a row where we're reacting to it. Similar levels, obviously it's not exact on these all 3 days, but each 3 days have pretty much hit that level as a level of resistance. So definitely a level of resistance right here in the short term that you want to be aware of on IWM. Thanks for stopping by and watching the video, everyone. Again, if you're not already a member at thetradinganalyst.com, visit us on the homepage and get to know us a little bit better. If you like the free videos and analysis that we give to you on a daily basis, it's truly nothing in comparison to what you get as a member at thetradinganalyst.com. Once you sign up with your free 7-day trial, not only are you going to get access to the profitable trade alerts, but you're also going to get access to the private Twitter feed, the daily watch lists, and the real-time trade alerts that are sent directly to your cell phone via text message, so you're never going to miss a beat or a move in the market. You're also going to gain access to the exclusive daily member videos, webinars, and an education from mentors like myself who truly care about your success in the market. It's a great opportunity, and we'd love to help you.